Are you wondering how to afford a house and make a mortgage payment with the high interest right now? Stick around because I'm going to tell you exactly how you're going to do that. I'm Downey, and I help first-time homebuyers and first-time investors buy amazing homes without breaking the bank or spending months making bids and not winning. So if you're considering buying a home in the next year, please subscribe to my channel, hit the notification bell so anytime I release a video, you will be notified. So I'm guessing you're watching this video because you're seeing the interest rates go sky high and you're wondering, how can you afford a home with such high interest rates? Well, I'm going to tell you exactly how you're going to do that. And at the end of the video, I'm also going to tell you if you are a seller and you're having trouble selling your home, what strategy you can implement to get more qualified buyers. So as a buyer, what can you do to get these rates down? Well, there's something called a buy down. And a buy down is where you pay money or you have a seller pay money to buy the rate down so you are paying less monthly. At the end of the day, it's all about that monthly payment. So if you're wondering how to qualify for a loan, if you can't qualify, or you want that monthly number to come down, then consider this. It's called the buy down. It's an interest rate buy down. And what is relatively new in the last month or so is this matter of 3-2-1 buy down or a 2-1 buy down. And this is really critical because if you're a buyer and you're wondering how you're going to be able to afford that monthly payment, you have to talk to a lender about that 3-2-1 buy down, 2-1 buy down. Because the 3-2-1 buy down is where you can pay a certain amount of money or have the seller pay money, which is the strategy I want to tell you about. Let's use this example. If you are trying to get a loan for $500,000, and the rate is 6.75, which as of now, actually today, the Fed made an announcement to raise the interest rate by another 3/4 point. And I was talking to one of my lenders, Raj, and he was saying right now you could get a 6.75 interest rate. So he said yesterday morning it was at 6.5. And so it wasn't a huge difference. But let's say it's 6.75, you're buying a home, $500,000. And you need a loan for $400,000. So what a 3-2-1 buy down would be, put a certain amount of money down, anywhere from $5,000 to $10,000. If you're doing a 3-2-1 buy down, that's going to be closer to the $10,000 range. But what that means is for the first year, you will be paying 3% less than that interest rate. So rather than 6.75, it will be 3.75. And then the next year, year 2, it will go up 1 point, which is 4.75. Year 3, it will go up another percent, 5.75. And then by the 4th year, it will be the regular rate to the end of the note. And typically it's a 30-year note. So if you're doing a 2-1 buy down, then you pay closer to the $5,000. And the first year it's going to be 2% less, so 2% below 6.75, you're at 4.75, and then year 2, you're at 5.75, year 3, you're back at that rate that you got for the duration of the loan. Now, the beauty of this market, if you're a buyer, is that sellers are willing to do a lot more than they were, say, 9 months ago. So actually, you can request the seller to do the buy down for you. That's my suggestion. So sellers, especially if the home has been on the market for a little while, say 20, 30, 40 days, you can request that the seller does that buy down, and that could be part of the contract. And this is happening a lot. Sellers are way more willing to offer concessions to sell their home quicker. And so you can say, hey seller, why don't you include this buy down, 2-1 buy down? I personally would advise my buyer clients to go for the jugular and ask for the 3-2-1 buy down because it's closer to $10,000. And you would be surprised what sellers are willing to do right now. Now, transitioning to the sellers. If you are a seller and you're not getting a whole lot of activity on your listing, what I suggest you do is promote the 2-1 buy down. And so what this is going to do is it can bring a lot more buyers potentially, because you're saying, I am willing to give you not the full amount, the $10,000 for the 3-2-1 buy down, but closer to $5,000 to $6,000 for the 2-1 buy down, because that will get more interest from the buyers to tell them, hey, actually you can get in this home for say 4.75 the first year, and then 5.75 year 2, and then back to the normal rate year 3. And at that point, the rates may have come down and you could refi. So doing a buy down makes a lot of sense in this market. I highly recommend taking the strategy as a buyer to have the seller include the buy down in the contract. And if you're a seller, to promote that 2-1 buy down, because it's not that much money, especially if your home has been on the market for a little while. You'll get some more activity potentially and get some more buyers. So please comment below, have you ever heard of a buy down? Some actually have not heard of this, so I'd be curious what you think. And if you are a first-time buyer or first-time investor, get my guide below so that you can pick up the 3 biggest mistakes first-time home buyers are making. And if you were considering buying a home in Dallas and you were wanting a quote for a mortgage, reach out to Raj. He does a great job. This is the link. You can get qualified in a matter of minutes, and then he will give you a call. Does a great job. I also work with a few other lenders, so if you're interested in getting some options, please let me know, and look forward to seeing you around town. Take care. Bye-bye.